What is going on, everybody? And welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you are interested in, consider subscribing, as I do provide daily content as well on Hemi 137 to give you just a daily dose of the pulse of the market, as the market is dynamic and it does change every minute, every hour, every day, and every week. So I like to provide my insights for the day and what I'm expecting from the market. So check me out there. And before we get started, go ahead and drop a like so we can get this video out and make it go a little bit viral potentially. But we'll see. Anyway, so as far as this past week, again, we are kind of in a lull period in which there's not a lot going on. We're trying to kind of still, we go on essentially this dead zone where we get a couple of weeks in between the next earnings cycle, which the next earnings cycle is on the 12th of April. So we are very close to that happening. Again, we'll get essentially bank earnings on the 12th on that Friday, I believe it is. So we'll start getting JPM and all them. Something I've talked about is they like to take, when you come into an earnings cycle, you need to pay attention on how everything is scheduled, because it is scheduled strategically depending on the current environment. And if you've been in the market long enough, you've noticed this a lot of times. They front load all the earnings to try to get all the industry leaders on board and kind of get a feel for what's happening. And right now they've essentially strategically placed all the major banks on a Friday, because if something happens, as we've seen with SBB, a lot of banks start going down. They had to strategize and move banks around, so the earnings aren't in the middle of the week, because it's a lot harder to try to protect the market from people selling and panicking if you got earnings on a Tuesday and JPM goes under. Then you have all week to have to contend to try to keep that market up. You can't come up with a story and all that stuff. People are just going to start panicking. Where if you place that on a Friday, you can announce it, then whatever damage will be done on Friday, then you can take it into the weekend and try to essentially cause that pause to try to stop the panic, and then come out with whatever kind of headline news or whatever discussions that need to be made. So this is what you need to pay attention to. And given the current circumstances that we're in with a bad economy and global tensions, right, things have to be strategically placed. So right now, big banks will report on Friday going into the weekend, and then they kind of then they try to do a little bit of taste of how big tech is going to do by coming out with Netflix and Tesla the week after. And then while they continue to do banks, and then they roll into the big earnings week, which is normally like the Super Bowl week of earnings, and you have like your Microsoft, Apple, Amazon all reporting in 1 week. When we noticed is that they took out Apple and Amazon and moved them another week on the not this past cycle, but the previous cycle, because they were unsure what was going to happen. Now they've been placed back into essentially this Super Bowl week. But what we've noticed is Nvidia, which has been essentially the leader in this whole massive market push up that we've had with their parabolic move, which is funny because if you notice and you're looking at the charts, Apple has been selling off heavily, but Nvidia has been pushing up. So a lot more industries are putting money in Nvidia as opposed to Apple, because the market hasn't hardly pulled back. The market is almost a representation of what Nvidia is and not what Apple is. So the weight there looks like it's changing from one to the other, as Apple is stumbling across their own feet and trying to determine what their next step is going to be, because they haven't really been very innovative. They try to do a car and they call that off, and then they start talking about AI, but then they start involving and partnering with Google. And so there's a lot of different problems and issues there that people are concerned with Apple to some extent. Again, it's still, they still have tons of money, and they can still pivot. They still have years to do something, but they need to start looking at what they're going to do now. And Google's in that same point. So we're going to have to see there. But anyway, getting back to the schedule, so you can see that schedule with NVIDIA, they placed that almost towards the back half of earnings. Now the earnings, once the earnings start, it goes all 3 months, and you get earnings all throughout. But again, they try to front load that on the earnings to get the industry leaders, and the market kind of makes its decision where it wants to go from there. And then, but they've placed again that Nvidia further back so that if something really bad happens, they're still waiting on Nvidia earnings before they really make that final decision. And so they're trying to prop up the market by the way they schedule these things. And if you're in the market long enough, you notice these things, these patterns that occur. So with that being said, again, we got a new earnings cycle coming up on the 12th, and we'll see what happens from that point. So let's go back and recap this past week. Again, there hasn't been tons of information, but there's been some very interesting developments that are occurring. Now, Powell's been on almost every week. This past, not this past week, he's only been on once, but the previous week he was on like twice, I believe. But again, he's still reiterating a lot of the same things that we're not in or on the edge of a recession. Which again, these are things that are reiterated over and over every time before we go into a big financial crisis. Yellen said the same exact thing before we had the 2008, crisis. And so, with that being said, that we have a chance. They said they had a chance to ease inflation without hurting economy. Now, that being said, you also had the PCE that came out the past week. Now you have the CPI, the PPI, and the PCE are all on the rise for inflation. And he's saying inflation is not going to be an issue, which means that he wants to turn the printers back on, and he's been hinting that there's going to be a cut soon. The printers will be turned back on. And a lot of people are betting, and something I've been talking about for many months, is this is the dip you're going to want to be buying on that first cut when they price in a recession. That's when essentially you're going to want to be in the market, because then they're going to turn on the money printers, and then we're going to have a massive rally again, in my opinion. From that point, anytime they turn on the money printers, that's your essential cue to get in the market because it's going up. But with that being said, we need that cut, and we have to have a major event for the Fed to cut. And right now, he is essentially trying to grease the skids to say it's okay for a cut. But the big problem being is inflation's already starting to rise. If he cuts, will inflation get out of hand? And then you start talking about running the risk of hyperinflation, which can be a very, very big issue. And this is something, when I talk about a lot of the data, I'm not trying to, be ultra bearish, but if you look at the number, if you look at the revisions primarily, you could see where there's not a very big there's a lack of trust there, because the revisions are so bad on these reports, right? All these things that saying we're strong and resilient, that there's no hardly historically low unemployment, right? These revisions have been revised down like hundreds of thousands of jobs, right? This data is so manipulated. Of course, inflation is going to come down, and that's the way inflation works. Like, inflation will come down in some different categories, but the ones that are basic necessities are going through the roof. So maybe you're not spending, $40, $60 on a t-shirt, right? But that $40, $60 you would typically spend on a t-shirt is now going to maybe your insurance payment that's probably 3 times that $60. Or you're buying milk or something that's it's like 5 times the price, right? And these are all prices way ahead before the pandemic. So, and then they try to push these particular things off on some event that's occurred, and whatever the case is, again, they're just trying to feed you BS, in my opinion, is what's going on. And so again, that's why I have this channel. I try to use these events and try to time the market and what's currently going on, and then kind of know where to steer. And again, I don't like to project far out, because a lot changes within a week, even within a day, a lot can change. And so, being said, it is concerning that Powell is starting to grease the skids, that things are okay. So he's essentially trying to warm the market up to the fact that we are going to have a cut here soon. And we're seeing that because more layoffs are coming. GE will lay off another 1,000 employees. I think what's in wind was one of the primary. We had a bit of a spelling error there. So with the CEOs resigning rose 20% month over month, is the highest on record, which states a lot in itself. Then not only that, you also have Country Garden delaying reporting for 2023 results and stop trading. We just saw this with Evergrande. Now we're starting to see the same exact thing with Country Garden, and Evergrande's come out. There's a lot of fraud going on there. So they're essentially having their 2008 crisis going on right now with the fraud cases, and their two biggest again companies that holding real estate. So with that being said, again, I don't think the world is essentially falling apart around us, right? Like um, you have China that's had a lot of issues, and they've essentially been stopping people to sell stuff. They have trying to protect the system because it's falling apart, and then now they're trying to stimulate and bring back the economy when stuff is just it's at a very devastating point right now. And so, like I've always stated, the stock market will recover a lot quicker than the economy will. But right now, uh, you have the demand has to come back, right? Like you have to build that confidence back, and sometimes, depending how much damage you've done, it could take a very long time. And now you got Europe talking about cuts and everything else as well, and then now Powell is starting to essentially again grease that skid that everything is going to be okay. That we're going to have a soft landing. Again, I don't believe any of that. You just had Yellen 2 weeks ago walk back her statement. Um, talking about inflation and where they're currently sitting at, and what we could potentially happen if we cut too soon. What's going to happen is that what's going to be important is that inflation. So as you can see, this is lining up for a couple rows, putting your ducks in a row that can essentially line to a lot of fear. So you're going to cut because of whatever reason, which is going to drive the fear. And then on top of that, what you're going to get is you're going to get inflation rising much quicker on, the next couple inflation reports following that, which is going to drive even more fear. So this is the concern, right? And this is why this next cut will start pricing in a recession. They're not going to call it that. They're not going to tell you ahead of time. This is not the way this works. It's going to happen. It will be emergency rate cut because of XYZ. And then the market will start to panic. And then we'll come to find out in the next core report, inflation is running up. It's more panic. And so you can see how this can cascade into multiple events that are going to start driving down the market. We don't know how far down. Again, it's all about timing. But I've talked about coming into this, you need to have a list of like the top stocks and top cryptos you're going to hold, because again, they have to be very good because they have to be able to survive what's currently going on, because it will get worse. In the economy, the stock market will recover, but you have to price in the recession first. Once the recession's priced in, you start buying. When we start selling off for whatever, it may take a month, maybe 2 months, and then at that point, then the market will start recovering. The economy will take years to recover, but the market will bounce back a lot quicker. So just keep that in mind. So again, all these other events that are currently going on are a very, very bad situation. So upcoming week, we got Powell on Thursday at 10 p.m. Eastern Standard Time. Again, he's given a speech. We have a lot of Fed members talking this week, so just keep that in mind. And then on Friday, we have non-farm payrolls. Again, a lot of pencil whipping there, so really looking at the revisions again. Again, headline news are going to project some great numbers because that's what the market moves off of. Revisions, the market doesn't care, right? But you have to look at the revisions and understand why there's a trust issue in the data, because things are pencil whipped. And then when you go a couple layers deep, you realize that no, it's actually really bad comparing to what they're telling you. So again, you can't just go off of these things. And again, you spend any time in the market. I've never been a huge crypto or a huge conspiracy theory person, but you start looking at these things, it's hard to just pretend like it doesn't exist, because you see it every single day. The pencil whipping is always going on to try to make you believe a narrative that is not true. You see it with the banks, the way the banks move, and just again, the market manipulation happens all the time. And then upcoming pivots, we got monetary policy isn't until May. Next core is on the 10th. Upcoming earnings starts on the 12th with JPM. Expected moves this week, nothing major. One thing I did notice is Tesla has jumped a couple points. It was 9 last week and is now 11 this week. So you can expect tech might be affected. And again, non-farms playing big into that. You have a lot of Fed talking this week as well. So just keep that in mind. Fed can move intraday moves a lot. So just keep that in mind. So, and again, we are still coming out of March, and we didn't really get much of a pullback. Do we get a pullback this week? It's really hard to tell. I think any kind of major move is going to occur when we start getting earnings. And I've talked about this over the past couple months. They try to push off any news until you get into earnings, and then they kind of just offload all the information at one time. So hopefully you don't pick up on every little detail because they just try to flood you with information at one time. And this is the same with any world event, right? Like during the pandemic, we found out we had aliens and we found out all these other things, right? They try to flood you with information at a given time. So they try to, again, push off all different kinds of information until they absolutely necessarily need to give it to you. And then when they do, they just offload everything. So hopefully you miss some of the details. So again, you've been in the market long enough, you notice these things, and that's just the way it is. You know, you could think it's a conspiracy, but these things they happen all the time. And they're not, right? And they play off, and there's too much, again, evidence showing that that's not the case. So being said, let's get into some technicals with all the crypto conspiracy and aliens. Crypto conspiracy. But anyway, so for SPX, so we did kind of wick down from the new all-time high of 52.64. Again, we've been in a very, very, very tight range coming up into this. Again, it's good for bullishness, but again, this can't last forever. And maybe we can push up to 6K. I don't know. It really just depends on timing on how this thing will play out. But again, we're on a very tight channel. And I always point this out every time we come, right? This move here back in October was when we paused rates. And if we didn't pause rates at that time, we would have seen new all-time lows in this current cycle, but we didn't because we officially paused. So again, we'll continue to watch and see what happens here. Like I said, we don't have any major events, so not really expecting too much. Wouldn't actually be surprised if we potentially come back down and retest the 5,200. If we do break out, again, you're kind of topping out roughly around that 5,340 right now. And I think we can potentially chop up going into election unless something major happens. Now, again, back in 2008, crisis was during the election year as well, so just keep that in mind. So it can happen at any point. It really doesn't matter what's currently going on. Typically like to think, it typically is, in most scenarios, it is a bullish year, and it typically is. But then you have your off years where things build up, like I talked about. That can keeps getting kicked down. They try to delay any information until they absolutely necessarily need to, and then again, when it happens, get flooded with tons of stuff. And right now we're kind of just getting flooded with tons of stuff, right? Like we had the Russia terrorist attack, and then we had the bridge thing happen in Baltimore early this week as well. And then now we've got all the stuff going on with P. Diddy and everything else, right? And whatever that brings on it. And we got also SVB CEO came out, in not Silicon Valley Bank, but the crypto firm, Sigmund Freud, not Sigmund Freud, but Freud, he essentially got his 25-year sentence this week as well. So again, all the information seems to just happen all at one time. And so we're kind of getting into that scenario where there's a bunch of stuff going on. Let's just essentially unload and put a cut in, price in a recession, and then just offload everything else. So again, could potentially be, and that's what we're kind of looking at. So that's SPX there. Bitcoin. Now, Bitcoin has recovered some, has been playing roughly back in the 71. Again, I think we could potentially chop in this range until we build up for the next big move. Again, the halving is only in about 3 weeks or so. It's on the 20th. So keep that in mind. We'll see how that does play out. But ultimately, again, what we're looking for here is I'm looking this to make a very strong run to the 100K mark. I don't know how much further past that will go. But the halving event, once the halving occurs, then you got a couple months for this thing to kind of just stay stagnant, and then it has that last massive brush, and that's essentially when you want to start selling all the crypto and getting back into stable, and then waiting for a pullback. But again, I think we could potentially chop between roughly the 75 and the 62 for a couple months until something major happens. Maybe right after we get to halving, maybe we could start getting pretty bullish back in May again. We'll see. But normal cycles, and this is something that's been very different this cycle too, is we pushed really hard coming into this cycle, into the halving, which we typically don't. But on the same token, we also have spot Bitcoin ETFs, and BlackRock is buying a ton of Bitcoin. And so, and a lot of the older generation would rather just hold an ETF as opposed to actual Bitcoin. And Bitcoin's CEO is very excited about Bitcoin because he didn't think he would be making this kind of money, and now he knows why everybody goes into into crypto. So nonetheless, we'll continue to watch and see what happens here, but just expecting this thing to kind of chop around. Again, if we have a cut, I'm expecting Bitcoin will do the same thing. But the thing is with Bitcoin is when it sells off, you get these crazy wicks. So you get these massive sell-offs, and you get these crazy wicks, and then you get these massive rips. So again, we could potentially even still push back down to the 50 one last time before we have that massive bull market. It depends on the timing of when that cut is, right? We don't know when that cut is. That cut may not be till next year. So, we tried to time it last year, but again, you can't go off for projections with the data because the data is all manipulated. And they're talking about 3 cuts. It went from 7 cuts down to 3. Now it may only be 1 this year. We don't know what's going to happen. Again, they're all just waiting to see what happens with the data. Ultimately, they're just waiting for an event to happen. Stuff is so bad that they have to announce over the weekend that they need a cut. That hasn't occurred yet, so we'll continue on this path until that occurs. But I expect Bitcoin to react. Bitcoin is part of all the market as well, right? The dollar goes down just as well. If Bitcoin's going to be the next currency, or what it quote unquote is supposed to do, it will go down just like everything else when you're in a depression, right? It doesn't matter if it's cryptocurrency, it still will go down, right? So just keep that in mind. So with all that being said, let's jump over to Tesla. Now, Tesla is again still consolidating a lot here. But like I stated, I think this thing is really going to break out here shortly. We may continue to grind down against this 60 and then a massive explosion out of this, as what I'm thinking, at least into the next bigger frame here, which again, I think this will continue to play out. We could put this on the weekly so you can see this better, but I think we'll continue to play out this this wedge for a while. Which would make sense because I think Tesla to really, really break out, what we need, and Tesla has built up like this, even when they had that crazy rip back in, what was it, 2021, you have to understand that it consolidated for many, many years, and then it had that massive year where it just ran, and we're coming into that, and I think it will be led by FSD, it'll be led by humanoids, AI. And I think the way things are playing out, especially with these technicals here, that will be the same thing, that when we break out of here, it will be led by humanoids, AI, FSD. And so with that being said, this is what I'm watching. So I think in the short term, we get a little break here and maybe push back up to the 240 mark. And then from that point, I think we get if we can, whenever that news drops, we can break out of this massive wedge and head up. But I think we've still got some while to chop in this area, roughly around between the 240 and the 158. Again, big thing to understand too about institutions, they're aware of these patterns too. And even if this breaks, it could be very short. It may just chop around here if it doesn't want to break below this wedge and then start shooting up. So you never know. These wedges aren't 100%. You can't go off of these kinds of technicals. That's why I use a lot of zones. But for the most part, these wedges work pretty well, but not always. Again, you have to understand there's a lot of playing against a lot of algorithms too. So we'll see what happens. But still watching that 160 is or 155 is heavy support, and then looking to break this short-term wedge here, a short-term trend here that we got. You can see where we're wedging down into this. So typically this descending wedge, you get a nice pop out of here. So that's what I'm expecting, is to break this little short-term wedge here, get a nice pop again, maybe back up to 240, get rejected there. Maybe we consolidate, come down a little bit, and then we rip. Even with a pricing of the recession, I think we can remain within here. I mean, Tesla's already taken like a 30% haircut since the beginning of the year. So it's already pulled back heavily. So, and it's been down for a while, despite the peak it's had, back here in, what was this, 21, November of 21. At the peak, we've kind of just sold off pretty heavy. So I think, again, we're going to play this, and then the humanoid spike is going to test us back to all-time high. I think, again, we're going to get an NVIDIA-type moment, and even Elon Musk has stated this, is that their FSD is going to have that open AI moment where people realize that, hey, cars can drive themselves and we don't need people driving anymore. And that's just FSD. That's not even talking about humanoids or any of the other AI components that Elon already has. And that understand it's a tech company more than it is a car company. And when that theme picks up, and you have to, again, also understand that their services is doing extremely well for energy as well. So that's not even considered in any of this, and what that could potentially bring. So watching that there, we'll continue to watch. Just jump on Palantir real quick. Again, they got it got downgraded, and so it actually started selling off. So it'll be interesting to see if we can get this thing back under 20 coming in. Again, I don't know how far this will drop on a cut. My guess would be we would probably hit around this range, around that $17 to $14 range, probably consolidate once we start getting a pullback. Do I think we're going to see these $5 numbers again? I don't know. I think we've kind of priced in a lot of the rolling recession for the most part. I think they may be like I said, a pretty quick, if it does come down this low, maybe quick, but I don't know. So we're gonna have to watch this. But you got pretty strong support here at the $20 mark, but ultimately, again, gauging for that $17, $15 mark. And right now, the top currently roughly being around the $25 mark. So we'll continue to watch that. Let's bring up NVIDIA, since this has been the behemoth of all of them. It's been consolidating a lot here, up here roughly at that 950, kind of holding pretty heavy support here at the 850. So we're looking for that. I think this may just go sideways until we get some news. If it does, we get some really bad information, maybe we actually drop down to the 775. Lower than that, I don't know. We got some support here at the 667. I don't really think NVIDIA, even with a really bad scenario, when we start selling off, I really don't think it's going to. I think we've seen our bottom for tech already back here. So we'll look and see what happens there. But that's what I got for NVIDIA. Let's take a quick look at PayPal. PayPal still strong support or resistance here at the $68 mark. So we'll see what happens there. But expecting this kind of just bounce back and forth between 68 and the 58. Looking to buy back in here at the 68. Or the 58, excuse me. Again, if we started getting some heavy selling, I could see us maybe retesting the 50. And I think that would be very short-lived. Like here was very short-lived, just a couple of days here, and then we started pushing back up. So we'll see what happens here. But I think it's just still a very undervalued company moving forward. So just keep that in mind. But none of this financial advice. So, and you have a lot of again, your big seven are still pushing up in general. So then we have BA. BA I've talked about multiple times. Again, it's the company had another emergency landing. Again, I don't even know how it's at the 192 mark. It's backed by the government, so it is what it is. But nonetheless, it's I don't really see this thing selling off heavy. It could potentially break the 180 if we start getting some recessionary type numbers. How low it will go, I don't know. It should be way lower than what it is now, and it's not. So we'll continue to watch and see how this plays out. But right now, it's playing this range between the 200 and 180. So looking to see if it does break back up. Again, it's held this range for a very long time, the 220 to 200 mark, and it finally broke below that. So we'll see if it consolidates here and pushes up, or if it starts selling over. Again, it all depends when that cut comes, but really watching those levels. JPM obviously has earnings coming up very shortly and already still ripping up. So again, until they start pricing in cuts and stuff, I don't expect this to pull back. Currently at all-time highs. That 200's really been a struggle to try to break, but it's pretty much almost in price discovery mode. So we'll see what happens on the earnings. If it does pull back, maybe we get down to the 180. Really, again, just depends on the news. You got a heavy support here at the 170 mark. But again, it's one of the top dogs now. So it is the top dog now. So I don't really know how far back it will. Can at least try to expect a 50% correction on this, maybe down to 180.85. We'll really see, but again, we have to wait for that first cut and then take it from there. So if you made it this far, I do appreciate you. It's been a wild ride, and I know I've been a little off today. It's been a long week, but nonetheless, still trying to produce the best content for you and try to give you the most insight into the upcoming week. Again, don't forget to hit the like button on the way out, and I'll see you guys on the next one.